Hello everyone, welcome back to our channel. Our home loan rate is on rocket high compared in previous 5 years rate, while the economists believe that the interest rate may drop in the next 1 or 2 years' time, based on there are no any new major economic crisis, also with a stable inflation rate. Recently, some banks have just raised their interest rate again, mainly to boost their profit margin, since there are no actual OCR rate increases or anything to do with the current economic situation. So, when you are looking to refix your home loan soon or the near future, choosing the fixed term rate can be a painful job. If you fix it for a short fixed term rate, then you may worry that the interest rate will still on a high level when you need to refix it once again. On the other hand, if you fix it for too long, then you may worry that the interest rate will drop quickly, which end up you paying more interest as well. In fact, there is no right or wrong answers for choosing the fixed term. You should make a balanced choice based on your requirement for cash flow stability and your risk profile. So this is our tool that we can be using. So firstly, that you can see on the side, what is the loan details that you currently have. So for example, let's say that you have $600,000 loan with a 28 years remaining term. You will need to double check that what is your remaining long term under your loan details for the bank that you're with. Also that we do have what is the fixed term rates that they're currently giving to you, compare that for longer term. So what we want to show in this case is, let's say that the bank gives you 1 year rate as 7.09% and 2 years is 6.99% for this example. So we want to know what is the break-even point. So what we meant is, let's say that if we want to fix it for 1 year for 7.09%, after that 1 year term expires, what is the rate that needs to be become? So it will be break even instead of we just choose a 2 years term straight away. So for this case, if we are choosing the 1 year term for 7.09%, after 1 year time, the interest rate will need to be at least 6.88% or 6.89% in order to match, we fix it straight away for the 2 years for 6.99%. So we do have an explanation below how does it work as well. So for example, if you are thinking that this 1 year term, I want to do it because of the 7.89%. And I do believe that after 1 year at a time, the interest rate should drop until it will drop to 6.7%, for example. Then you may want to do 1 year rates because you believe that the interest rate should drop faster than the break-even point that we have at 6.89 or 6.88%. Depends on your interest-only loan or the principal plus interest loan. However, if you think that the interest rate may not drop that quickly, you believe that the interest rate will be quite stable after 1 year time, and it's likely will be around, let's say, 6.9% or 6.95%, for example. Then in this case, you know that if you need to refix it for 1 year after, the interest rate will need to be down to 6.89% to make it work to be break even for the same term that we have in 2 years straight away. So in this case, you may rather to choose a longer interest rate, which is the fixed term with 24 months, for example. Of course, for the bank side, they can give you a list of the interest rate that you can choose from 12 months, 18 months, up to 5 years as well. We can't give you a recommendation straight away saying that you don't fix it for such a long time or you should fix it for a short time. But you can do some general comparison that from yourself using our tools here. So the other example that we can choose from is, let's say that we do have a term for 18 months and we do have a term that you want to do is up to 3 years. And the 18 months right now is, for example, 6.99%. And the 3 years term down to 6.5%. You can see a big difference, right? Now you are thinking that, okay, after the 18 months of time, if we fix it for 6.99%, we want to refix another 18 months again to match it for 36 months that we have, which is 3 years. What is the break-even rate? So in this case, that if we need to get after 18 months, if we instead of we are doing the 36 months straight away at 6.5%, the renewing 18 months rate needs to drop down to 6.01% or 5.98%. So basically down to at least 6% in order to match what the 36 months straight away as a 6.5%. If you don't think the interest rate will drop that quickly, same thing, then you rather fix it for a long time. But the other combination you need to look will be as your cash flow and what are you looking for stability as well. Interest rate is only one thing, because if you have a very good cash flow, the high interest rate right now it's such a big problem, but you want to have your stability of your repayment. Some customers are looking for a longer fixed term rate, even though that they may think that the interest rate may drop quickly. But some other customers say, actually, that is not a problem. I don't want to pay high interest to the bank because I do believe the interest rate drop. Then using this tool also gives you some ideas what is the break-even rate, and then as I compare with the same rates that you are thinking of after your fixed term is expired, and then you need to renew about it again. So hopefully this tool able to give you some good details as well, and you are able to download from our description below under the YouTube video here. So currently, most economists predict that the interest rate should start gradually declining after the end of 2024. To help you to make a more suitable choices when refixing your home loan, we have created a tool as just shown to you earlier to calculate the break-even point, which you can download from the link below from our video description. You can use this tool to calculate the interest rate you need to achieve on a break-even point if you're choosing a shorter fixed-term rate compared with the current long-term rate. Hopefully, our content and tools can provide you some helpful insight while helping you to make a better decision to choosing your fixed term. In addition to the break-even calculator introduced today, we have also created a series of other calculators for investment property returns, loan repayment amounts, and much more, which we will share with you in the future videos. If you have any questions or suggestions, please feel free to contact us by phone and emails. We'll see you in next video.